reports. The first quarter earnings season starts off next week, I think tentatively around the 12th, with Infosys revealing the numbers for the first quarter that kicks off the results season. But how will the results season be? We've already started getting the first set of preview reports. As a matter of fact, CRISIL put out a preview report yesterday. We have Rahul Prithiani, Director at CRISIL Research, with us from Mumbai. Rahul, thank you so much for taking our call. Let's talk about qualitatively as well as quantitatively. How do you see the first quarter results season? What kind of growth or rather degrowth are you looking at?
See, as far as revenue is concerned, we are looking at about a 5% kind of growth. You need to keep in mind that till last year we were growing at around 17-18%, and sequentially we've been seeing a drop in revenue growth. So this quarter we are looking at numbers around 5%, which we believe is somewhere close to the bottom. And going forward for the rest of the year, we are expecting some amount of uptick. As far as margins are concerned, we also believe over there we've almost seen the bottoming out. We are closer to about 18.5% or so. So we should be in the 18 to 18.5% range. So we are not seeing any worsening compared to what we saw in Q4.
Okay. What is that single underlying theme for this result season? If you look at the last, I think 3 or 4 quarters, we've seen a drop in turnover. And the time before that, I'm saying the first couple of years after the financial crisis broke out, we saw a sharp contraction in profitability. So after profitability decline, we've seen a turnover coming under pressure. Margins have also been all over the place. What will be the underlying theme this result season? Do you think turnover decline would actually be the one key factor to watch out for?
Yeah, as far as our sense is concerned, from whatever we've seen and our sense of speaking to people, turnover growth is now almost bottoming out. Now from here on, we are not likely to see further declines. And bear in mind, we also did an analysis and we saw the quarterly results for the last 10 years. If you adjust it for inflation, we've been negative only in about 3 quarters in the last 10 years. If you look at Q4, we were actually negative. So that clearly shows we are close to bottoming out. Now from this point onwards, there are many sectors which will benefit on account of some decline in commodity prices. Sectors like FMCG, power, tires, some of these sectors where we believe now we are seeing some benefit on account of commodity prices, though rupee is still playing its role. Even telecom, we are expecting some amount of improvement in margins this quarter. So for some sectors, we are seeing some benefits coming about.
Which sectors would face the brunt of pressure because of rupee depreciation? And if you look at the rupee move in the last couple of weeks of June, actually picked up really sharply, but the trend was actually lower, I think starting May, second half onwards. How would the rupee play out, and how would the rupee, and in which sectors would we see the maximum impact?
See, as far as the rupee is concerned, it's actually, the good thing has been that global input prices for most sectors has been actually coming down. Rupee has actually, despite moving adversely, because the underlying commodity prices have come down, so the impact will be slightly cushioned in sectors, global linked sectors like oil and gas, steel, etc. But sectors like airlines, where rupee constitutes a significant proportion of the overall cost structure, so there you will see a significant pressure.
Okay, can you help us with some sectoral thoughts as well? As a matter of fact, I looked at the report. Auto sector could see 3 to 5% growth. Capital goods, cement, construction, IT services, pharma, power, steel. It's a pretty comprehensive report. But let's talk about the sectors, particularly the auto space, the capital goods and the IT services. What kind of growth are you looking at?
See, as far as the auto space is concerned, we are expecting growth to be very, very tepid. In fact, we are seeing some pressure over there. As you are already aware, there are volume pressures, especially on the commercial vehicle side. Even on the car side, we are seeing some pressure. So there we are expecting some pressure to continue, and there will be some pressure on margins also. So we are expecting a decline of about 50 to 60 basis points. As far as some of the other sectors like IT and pharma are concerned, there we are expecting revenue growth to be fairly healthy at about upwards of 15% or so. Even FMCG is expected to see healthy revenue growth. So margin pressure is expected for sectors like automobiles, shipping, fertilizers, capital goods and construction again are suffering on account of the continued weakness in the capex cycle. Sorry?
Sorry, nothing. Go on, please.
Yeah. So we are expecting some pressure there. Sectors like cement also are likely to suffer because the demand is fairly weak, and at the same time your freight costs are moving up thanks to what is happening to diesel prices.
Okay, fair enough.
Rahul, thank you so much. We'll bring you on a more detailed chat as the numbers progress, as the result season picks up. Thank you so much for joining us.